On the phone line in Hamilton is Louisa. Hello there.
Hi there. Thanks for taking my call.
You're welcome.
I'm interested in your opinion on Home Depot and whether you own it. I bought it last May at about $79, and the stock has kind of had these gentle ups and downs and has gone as low as $72, although I continued to hold it. I'm starting to lose patience with it. I bought it thinking that it would be a more conservative way of participating in the U.S. housing recovery. What are your thoughts?
Great. So, Louisa, I think that your rationale for owning the stock makes a lot of sense. So we believe we are in a slow growth, slowly improving U.S. economic environment. And we know that the U.S. home industry went through tremendous restructuring. And through that period, we always look for the companies that were able to get stronger through a restructuring period and come out the other side stronger. And clearly, Home Depot is one of those companies. They came out with very, very strong operationally, and we're seeing an improvement in spending on renovation and also the professional market. So we own the stock, and I agree with you. The stock has been consolidating over the last 2 to 3 months. At the same time, the home building sector went through some consolidation. I'd encourage you to take a look at the chart of ITB, which is the U.S. home building ETF. Yesterday, very strong breakout in that group. And so I think that we are coming out the other side. If you look at most consumer-related sectors over the last 6 weeks, they consolidated sideways. A lot of the retailers over the last few days have started to pick up. You can take a look at the FXD, which is the consumer discretionary sector. It's turned higher over the last 2 to 3 weeks. I think that it really was being held back more by consolidation than anything else. Their most recent earnings were dynamite. And I think that as we get through this period of very cold weather, you're going to start seeing some of these retailers separate themselves from the rest. And I think the Home Depot is one of them. So stock's trading within a whisper of its all-time high. And I think you buy the stock here. We're coming into a seasonally stronger periods, spring and summer. I think the stock should perform pretty well.
And there's that consumer discretionary ETF you mentioned. ITB is the home builders ETF, or one of them anyway. So do you think that we saw that early run in the home builders, premature or not, then we saw consolidation, so we're set now for another leg up?
I think that it looks that way, and you really have to look at them as to which regions they're focused in. One of the big reasons people would buy the home builders specifically isn't because of the earnings leverage coming from finishing and selling homes. It's the value that's created in converting raw land into a neighborhood or the development part. And so you look at who owns what property can add that value. But in the renovation market, Home Depot, I think, would be the clear leader, and that's one that I think can do quite well.
All right, David. Next up is Natalie, who is in Toronto. Good afternoon.
Good afternoon, Mark. Thanks for taking my call.
You're welcome.
Mr. Burrows, my favorite all-time analyst. I've told you that a million times. I never miss a show you're on. And my specific question is about Verizon. I don't know if you cover Vodafone, but I was offered some exchange stock instead of Vodafone. Vodafone is offering Verizon stocks, and I have to decide whether I should accept them. I wonder if you could tell me what you think of this trade.
Sure.
And I'll hang up and listen.
Okay. So thanks very much for your comments, Natalie. So what Natalie's referring to is Verizon is buying Vodafone Wireless, and in return, investors are getting stock. And so I think that ultimately, let's start the way we look at the world. Telecom is slightly less interesting than some other sectors right now because it's really more of an interest rate proxy than it is a play on growth in the economy. Verizon's actually quite attractive because just about 70% of their revenue comes from wireless. That you could compare that to BCE, for instance, which would be down around 30%. But in the very short run, the headwinds that you'll see in the Verizon shares is as these stakeholders in Vodafone Wireless wind up with these Verizon shares in their portfolio, many of them in Europe, I think you're likely to see a lot of that turn around and get sold back out into the market. So there's likely to be a short-term headwind for Verizon. I think the other issue is that just for the telecom group as a whole, money may be moving away from the interest rate proxies to things that have a little more economic sensitivity. But if you're a Vodafone stakeholder, you're probably going to need to take the stock. But I might look for another home for the capital going forward.
Let's stick with this telecom theme. We have an email here from Baxter in Greeley, Ontario. Could you ask David which of the two, Verizon or BCE, you'd recommend for a combination of a reliable dividend and growth prospects?
Right. So both of these companies generate lots of cash. Both of them have about a 7% cash flow yield. So you're going to get your dividend. You're going to get some dividend growth. If I had to choose between the two, I think that, as a Canadian investor, many Canadians tend to focus in Canada. Verizon probably a little bit better positioned longer term with the higher wireless content. BCE, there's obviously media content that comes along with what you're buying. I think that they both will do okay, and they will both be attractive investments for that money that's coming from fixed income looking for another home. It just might not be the strongest group in the market. So it's for a more conservative investor. You are going to get the yield, and you are going to get a little bit of dividend growth. You probably shouldn't expect it to participate in line with market. It probably underperforms the market a little bit. But then again, risk reward, you're not taking on tons of risk in this position.
Do you hold BCE in your income fund?
We do not own BCE. We do own TELUS, and it's been a significant holding of ours for about 5 years.
And as most viewers know, BNN is a division of Bell Media, which is owned by BCE. All-time high was around 48.43, roughly. We're looking at 48.22 on BCE today, so it's getting pretty close. Well, let's take a look intraday here at the parent company. The high today was 48.23, so right near the highs of the session. Let's take a short break here with David, and we'll come right back with more of your questions.